Hey there guys, this is Brian here, brianchai.com, and in this video I'm going to be going through whether should you use indicators while trading, right? And I think this is a pretty controversial topic because there's a lot of traders that swear by them, and then there's some who don't use them at all and says, you know, you don't need any indicators, right? And those traders they are called price action traders, right? They trade based on prices alone. So, and then there's some strategies that works for that, and then some not. So I'm going to be going through, right, whether should you use them or not. So first off, I think it really depends on your trading style and circumstances, because it's not going to be the same for everyone, right? So I'll say you can be successful both with indicators and without, but it's important to know when to use them and how to use them, right? Because the thing about indicators is that while it helps you make informed decisions, it can also cloud your judgment, especially when you have so many indicators, right? Imagine you've got like 3 indicators, and then you've got a few different lines on your chart, and then everything just it's all over the place, right? And then it's very easy to get information overload, and then when that happens, you get confused, and you have paralysis analysis, and then you can't make any good judgment call at all, right? You get stuck, and then that's not what you want, right? In that case, you want to cut down on the indicators that you are using and only focus on the relevant ones, right? So an example of this is, say, look at what your strategies are, right? If you are trading like a trending or momentum strategy, so you want to ride out the trends, then you are going to look for indicators that help you determine whether the market is trending, right? You want to have a longer time frame for your trend to ride out. So, you know, for this kind of strategies, indicators like moving average, you know, Ichimoku cloud, stuff like that can help you really kind of gauge whether whether it's an uptrend or a downtrend, right? You can use crossovers, you can use them as support levels to gauge. So for those, it'll be good to have the indicators, right, if your strategies require them. But say if you are trading, say, chart patterns, right, you are looking for like double top, triple top, head and shoulder, cup and handle, all this, right, price action style, right? You're relying on the price itself to make decisions, and the patterns. So in that case, if you are using that, right, then you want to stick with that, because that's the main strategy. So say for example, you have a head and shoulder forming, right, and the price is going to come down, and then but somehow, you know, maybe you've left on your oscillator, right? Maybe like RSI or some other oscillator, right? Indicators. So in that case, you know, when the price is going down and it's about to break through, your main strategy is a head and shoulder. That means you should be going short. But when the price goes down, the RSI can be in the oversold condition. So that's a buy indicator, right? So sometimes when you add indicators, you can get conflicting signals. So in this situation, right, it'll be better to find indicators that help you with that strategy specifically, or you don't have indicators at all, so you just base it on the chart pattern, right? So for head and shoulder, you've got your neckline, right? So you should know where to enter, where to take profit, and where to put your stop losses, and then you can just trade based on that alone, right? And don't get bothered or, you know, scared of the indicators saying that it's not a good idea, because you have to be using the right ones for the right situation. Yeah, so that's one example. And another example is, it could be using the right type of indicators, because, you know, there's many different kind of indicators. There's a lagging indicator, there's a leading indicator, there's a trending, there's a oscillating, right? So you have strategies like that works better while the market is ranging, right? Like going nowhere, just like stuck within a trend channel, up and down, up and down. So for those strategies, you want to look for oscillator indicators, right? Like Bollinger Bands, your stochastics, stuff like that, because those work better while they are in a ranging or consolidation phase, right? And not when it's a trending or breaking out, because when those things happen, then you should be using other indicators for that. Yeah, so I think whether you want to use indicators or not is definitely something that you should look into. But the thing is, most important thing to watch out is to use the right one and don't overcomplicate things, right? Like if you really have an indicator that does one purpose, what it is meant for, you don't have to add another indicator that kind of does the same thing, but you know, it might not be exactly the same. So you kind of overcomplicate things, right? Instead of just having that one indicator as a signal, now you have two, and then sometimes it fires off together, sometimes it doesn't, right? Like you are just overcomplicating things. You'll get lesser entries, and then but you're not really filtering out the important stuff. So yeah, you don't have to use too many. And yeah, that's for this video. I hope you guys enjoyed watching. So subscribe to my channel if you haven't already, right? Give my video a like or dislike. If dislike, then at least tell me, you know, how I can improve it, right? Write it in the comments below. Also check out my website, right? brianchai.com. Right? I've got a free workshop, free trading group, Discord trading group, have signals, price alerts, right? News, all the useful stuff there. And yeah, I'll see you in the next video. Thank you for watching.